we do, as we always do, is jump out to the monthly to help us maintain some perspective. And as we can see here on the monthly still remains in balance. We are trading above the previous month's high, which is something key to pay attention to, the 53.17 quarter. Should we get below that level, you may see a little bit more of a pullback. We could see more liquidation as this monthly breakout looks to fail below that level, or looks possibly like a failure below that level. Now, remember, on a monthly basis, when we're talking about a monthly breakout, there's a lot more going on than there would be on a weekly or a daily. They have a full month to kind of massage this level, so we could trade back and forth across it multiple times. So, don't die on it. Just make sure that you know where that level's at. Switching over here to the weekly, you can see last week we finished with a +4, indicating that continuation. So we've got that pullback, and now we're one time framing higher for 4 weeks in a row. Finishing last week on a +4, a little bit of a wick on the top, a little bit of trade back into range after the move to all-time highs. Now, a level that we want to be paying attention to is that 53.33 level, as well as that was the previous all-time high, I believe. So just monitor that level. Settle yesterday, or the close from last week, 53.27, so pretty much the same area. Below that level, you could see a chance for increased liquidation, as we assume that these +4s are momentum traders coming into the market. So below the close of the +4, basically where they push the market to, you may start to shaking out some of the laggard or weaker handed longs in the market. So definitely be paying attention to that. A little bit lower, previous week's high, is 52.64, definitely a level to pay attention to. And then also the previous week's open, 52.62, about the same level. So a little bit of an equilibrium there, something that we want to be paying attention to should the market pull back a little bit more. Switching over here to the daily now, we can see the daily remains in balance. We have a 3-day balance here after this continuation up. We did get a cessation of one-time framing on Friday. Market traded back into the previous day's range, and we're really just balancing. I'm kind of drawing this balance area from the 53.12 up to this 53.33, 53.40 area. The important thing to note here is, should we not be able to continue above those areas, so there's like 53.36 or below the 53.12, you likely kind of remain in balance, and we wait for a little bit more information. Remember, when we get these breaks from balance, you want to be paying attention to continuation. Should we get the continuation, you always want to go with. Now, to the downside, it might be a little bit more difficult, as we do have a few gaps still left, so there still may be some stuck shorts. We got this 3-day balance moved higher. We're balancing 3 days higher, so I wouldn't be surprised to see a look down into this gap, but just don't be surprised if we test the gap and then revert back up towards that 5,300. Now, switching over here to the profiles, you kind of see the plan for today. Above the 53.36.42 area, I'm looking for the buyers to step up to go test that poor high and see if we get that continuation beyond balance. My first target up after the previous day's high, or after the T2 high, is going to be that 53.56, and then above that the 53.75, right? Just draw it in quarters and call it a day. Below that 36, the market's likely going to chop. We do have that weekly +4, 53.27, so there is some long opportunity, I think, above that level, as long as the market is able to kind of establish and hold. But as it breaks it more and more, it starts to become more choppy, and then we've got to be paying attention to that previous month's high, which is that 53.17. Below that, I think the sell pressure starts to increase. We're below the weekly +4. We start to get below the previous month's high. May start to shake out some weak longs and get some liquidation that would look to test that 52.94, and then the 52.82 is my second level down inside that gap. Now, inside that gap, we can see the market, the gap goes down to the 74, so that's where the market would be looking to trade down to. We'll see. That's a pretty decent ways away, but we've had some pretty good ranges, and we're starting to get a little bit tighter here. All right, see a lot of 30s, 33, big 50 on the move out excess day, and then we've kind of got this balance 30 and 23. So expectations relatively low. We'll see what the Fed brings. A lot of Fed speakers today. They could shake some things up. We'll really just kind of have to pay attention and see what they bring us. But other than that, that is pretty much it. It's Monday, right? Let's get a feel for the market. Don't try to force anything too early. And just be prepared to react. Remember, we're in a balance zone. So if you're taking trades that are not near the edges of balance, they want to be responsive. So you want to be waiting for those pullbacks. Don't be looking to take a breakout from 53.20 trying to take the high, right? You're in the middle of balance. It's going to be choppy. That's just kind of an expected thing. If you want to, if you're looking for that breakout trade, do it towards the edges of balance. But yeah, other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.